I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your Bloomberg First Word News. President Trump kicked off the 139th annual White House Easter egg roll today. Walking on the South Lawn, reporters asked the president for his message to North Korea after the country's failed missile test on Saturday.
Any message from North Korea?
You gotta behave.
In Europe, the top advisor to French presidential candidate François Fillon says negotiations on the UK's exit from the European Union will likely take more than the 2 years estimated. Former French Prime Minister Jean-Pierre Raffarin in Bloomberg tells us that he doesn't believe 2 years will be enough for efficient talks. In the Middle East, nearly 500,000 Iraqi civilians have fled Mosul since October, when U.S.-backed Iraqi forces launched an attack to retake the city from Islamic State militants. The United Nations says 500,000 still remain, and food, water, and medicines and stocks are all running low. And a team of scientists says today that for the first time, human-caused climate change has rerouted an entire river. Nature Geoscience found that in 2016, the retreat of a very large glacier in Canada's Yukon Territory led to the rerouting of its vast stream of meltwater. Global news 24 hours a day, powered by more than 2,600 journalists and analysts. I'm Elisa Parenti, and this is Bloomberg.
I'm Caroline Hyde. This is Bloomberg Technology. Coming up, well, Netflix kicking off tech earnings and subscriber gains in the first quarter fall short. We'll explain what's behind the slip. Plus, Uber has lifted the veil on its finances for the first time. We'll run through the ride-hailing giant's closely held numbers. And one man is spending millions to get Elon Musk to break ties with President Donald Trump. Why? We'll hear from him ahead. But first, to our lead. Netflix shares initially fell in after-hours trading off the back of the company's first quarter earnings report. But now you can see on my terminal shares at one point falling below $140. That was post-close. So if you type in GIPO on your Bloomberg, you can get the post-bell trading. We're back up above the low line now. We're up 1.2%. So shrugging off those initial concerns, focusing in, of course, on the customer additions initially, and the numbers, well, they were below what analysts had been expecting for the first quarter, but then the second quarter looked a little bit stronger. Let's have a little look at the first quarter, because the streaming giant added 4.95 million customers in the quarter, more than 500,000 behind consensus estimates. Joining us now for more and these results, Andre Swanston, CEO of True Optic, a company that collects data on streaming viewership. Also with us, Greg Portal, lead partner at the research firm A.T. Kearney. Gentlemen, thank you for joining me today. And I just really wanted to kick things off with you, Greg, because you, glass half empty, glass half full, when you're looking at these numbers, the shares are now climbing above that zero level. We're at 1.56%. Are you worried about Q1 or optimistic on Q2 subscribers?
Well, they've pushed a lot of pressure onto Q2. Obviously, by missing the estimates for the first quarter, they're going to have to come through with a strong addition in the second quarter, but the market that they're facing and the challenges they face around subscriber churn aren't really going to subside anytime soon. So the pressure will get real in the second quarter.
Pressure get real in the second quarter. Andre, what about the content? We're expecting the content to become thicker and faster in the second quarter as well. The next step in series we're expecting in the House of Cards in particular. Are they really lining up the content to be there to draw in these new subscribers?
I mean, obviously, Netflix has made substantial investments over the last year or two in terms of developing their own original content. But in general, I think that investors looking at the value of Netflix just based on what their previous quarter's subscriber acquisition was is really a missed opportunity. You know, if we look at all the ways that they can still monetize that audience, regardless of if they get new subscribers, things like branded content, things like merchandising off of this new original content that they own, I think that there's really a lot more diversification and opportunity to monetize audience for Netflix, other than, you know, whether they get 5 million or 4.5 million subscribers.
That's interesting. So, Greg, should we be shifting our attention away from subscriber growth, looking at other numbers before I ask you to dig into expenses? Should we be looking at areas of opportunity to grow?
Well, that is one thing that I'd expect to hear more of going forward in the next couple of weeks, is what their innovation platform is. Because the concept of let's make a couple TV shows, let's sell some subscribers, is getting a bit more competitive and well-worn. They need some sort of innovation platform in order to bring the competitive edge up in the second quarter. So I would expect to see something there.
Andre, dig into these innovation platforms that we might see. You talk about selling on content. Who would you see them selling the homegrown content on to? What sort of other areas of opportunities are they? Because they're still saying no to sport at the moment and spending big on marketing instead.
Yeah, and I agree. I think saying no to live sports would be, it's very much out of their specialty, and I think it's a very expensive arena for them to go out and challenge other people in. When we look at the branded content, so across the over-the-top ecosystem, most of the growth over the past year has actually been in ad-supported content. And I don't see Netflix, at least domestically, starting to show 15 and 30-second ads in their content. But because they're producing original content, having a Hyundai shown in an episode of Luke Cage, and then through a measurement partner being able to prove that that household went and bought a Hyundai, there's really significant dollars that can be seen there. And so I think a lot of the innovation may be in ways that they can get brand engagement, brand sponsorship, and merchandising in particular.
Interesting area, maybe a little bit more product placement going forward. Greg, what about the ongoing splash of cash that we continue to see? They say $1 billion is how much they're going to be spending on marketing in 2017. Add that to the $6 billion that they're spending on actually making the content. At what point do we start to see perhaps a reining in of the spending, or do we not?
Well, the revenue growth numbers clearly support a company that's still in growth mode. At some point, they're going to need to figure out how to make the adjustment into more of a mature going forward business. So things like SG&A costs need to come under control. They need to figure out a way to manage subscriber churn in a more cost-effective way. And then obviously avoiding any mistakes on long-term content costs. All three of those are going to be important cost management tools as they evolve from a growth company to more of a steady state profitable company.
And of course, all eyes on competition. Andre, what about you saw potentially a Bloomberg scoop saying that look, Comcast is going to get in on the act when it comes to streaming as well. Where else could we see perhaps Netflix having to fight back?
So, one of the things that concerns me, and I've been saying this for quite some time, going into international markets is a lot more difficult than I think people realize. So it's not just having the distribution rights to big blockbusters from Disney or others in markets. When you go into markets like Brazil, India, Indonesia, they have very well developed and established local content in the local languages, and there's big players that own the rights to that content already. So the pressure to produce original content in multiple different languages for different genres is going to be astronomical, and not to mention the domestic pressure that they're getting from the telcos and MVPDs that are coming into OTT more aggressively.
Interesting. So Greg, do you anticipate perhaps M&A happening abroad to be able to make that sort of international content? How do they satisfy the international expansion and fend off some of the competition we were just looking at? Well,
their commitment to original content helps mitigate that to a certain degree. One of the bigger challenges that's probably not as appreciated going internationally is the challenges they're going to have with subscriber acquisition and how they use consumer data. A lot of their programming, a lot of their marketing is driven off of the data they're able to collect on consumers. Internationally, those direct marketing channels and those data usage rights and laws are much different. So that's probably going to be a bigger content challenge for them than just the acquisition of content and television shows.
Fascinating conversation with both of you. I wish we could dig in for longer. Andre Swanston, CEO of True Optic, and Greg Portell, lead partner at A.T. Kearney. Thank you very much for both of your time today. And let's do a quick check on US stocks other than Netflix. Both the Dow and the Nasdaq turned in their best performance since March the 1st today. Digging into individual movers for you, Nvidia rose nearly 4%, the chip maker being the best performer on the S&P 500. On the flip side, Snap falling more than a percentage point, but as you can see, there was a spike late in the session. This after The Information posted a story saying that the company should consider selling itself to Disney. Now, another key story we're watching for you. Verizon may throw its hat into the ring with a bid for Straight Path Communications. That would challenge the $1.6 billion offer its rival AT&T already made for the company. Now, Straight Path holds spectrum licenses needed to power 5G wireless for faster internet speeds. Shares of the company hit a record in Monday trading. Coming up, a murder out of Cleveland has gained widespread attention after it was posted on Facebook. We'll explore how the company is navigating the posting and sharing of violent acts. This is Bloomberg. Now, Facebook Live was launched last April on the same principles the company has been pushing for years, instant sharing to as many people as possible. But the feature also exposes the darker side of the web. Since its launch, there has been several violent acts, even murders broadcast live, all leading up to the events in Cleveland over the weekend. Now, police are searching for a man suspected of killing an elderly man and uploading footage of the murder to Facebook. A Facebook spokesperson said late Sunday that the video was recorded and uploaded, not streamed via Facebook Live, as police initially reported, but it took several hours before the video was taken down. So how can the company, with more than 1 billion active users, navigate and enforce use of its platform? Here with more, Sarah Fryer, who covers Facebook and other social media companies for Bloomberg Technology. You know this company inside out, and you've also seen how difficult it is for it to monitor this sort of very heavy-duty technology it's developing, and it needs humans to be able to assess the content as well as robots.
Facebook has a pattern of releasing products first thinking about the social implications, the things that would make it great for connecting with your friends and family, and only later thinking about the societal implications, the things that could go very wrong. We saw this with the fake news situation that they had after the election last year. We've also seen this over and over with Live. This is a product that Mark Zuckerberg demonstrated for his daughter's first steps. Other people have used for similarly innocent reasons, brushing their teeth. That's how it was marketed. But the problem with this kind of thing is it's very difficult for Facebook to tell if a video is actually broadcasting a murder, for example. You could be easily showing somebody a trailer of a movie that has a violent scene in it. How can Facebook's artificial intelligence determine that versus something that's actually terrible and violent and not allowed on their platform?
And so at the moment, they've talked about using AI,
yes,
but they've also weaved humans into the situation and used, 4 different offices that are meant to be able to judge and categorize whether some of this content is indeed disturbing. How can they actually speed the whole situation up, really?
So they right now have the people sort of training the algorithms, but like I said, that's very difficult. So right now, the way a video gets flagged and taken down is if actual users see it first and then say this video needs to be taken a look at, and then somebody in one of their offices giving 24-hour monitoring around the world will review it and decide whether or not it should be up. But that whole process is long, and so the way they could speed it up is by actually building the data off enough video content that comes in to be able to detect automatically. That said, you don't want to remove someone's video if it's not actually bad, and they've had some instances where they've removed content that isn't, like the example, for example, the Napalm Girl photograph that got removed for being considered child pornography, when of course that is a Pulitzer Prize winning picture.
And iconic indeed. I mean, this has got to be something that is affecting, as we build artificial intelligence in general, but also Facebook isn't the only company that does live streaming, isn't the only one using video. I mean, has Periscope ever been affected by this? Twitter? What have other companies done?
Absolutely. I mean, so many companies have been affected by this. And the thing that I would note is this is something that advertisers are worried about too. As far as we can see in Facebook's history, the ads have been separate from the content, right? When you look at your newsfeed, the newsfeed ads, they look like posts from any of your friends. As Facebook moves more into video and starts thinking about video ads, they're going to start putting ads, or they have started putting ads in the actual videos, tying advertiser content to other content. that opens up kind of similar issues that you've seen with YouTube and Google, where they've had ads tied to messages that are extremist, racist, etc. And Facebook's going to have to start to navigate those waters as video builds up on its platform and as they start to make more money off of it.
And navigating those waters, coming out and apologizing and indeed speaking to those who could help them. It's interesting. It's F8 is about to be upon us. It's the calm before the storm. Yeah, and do you think Mark Zuckerberg in his keynote will address this to the developers that they bring to this part of the world?
Well, what I'm really interested in tomorrow at F8 is Zuckerberg earlier this year put out this manifesto, they call it Mark's Letter, in which he outlined over the course of 5,000 words exactly how he thinks Facebook can go beyond connecting the world and start to improve the world and make these communities tighter, help our civic engagement, make sure we're more informed people. And so I'm really curious. I mean, those are all very vague things, but this kind of instance does play into it. This live video that is maybe has a shock value or makes Facebook feel less safe to be on. Yeah. I mean, these are all things that he's going to have to address in a broad way. I honestly doubt that he will mention the murder in the most important public address of the year that he's going to give at F8 tomorrow. But I think that he will definitely talk about using the tool, Facebook, the network, to try to, make everything a little better, but whatever that means to them.
The optimistic side of Facebook rather than the pessimistic. Sarah Fryer, as ever, fantastic reporting. Thank you for the analysis. Reporter at Bloomberg Technology. Now coming up, the Taiwanese company is said to be the Y Combinator of Asia. We'll bring you the Accelerator's plan to invest in Asia's tech startups. That's next. This is Bloomberg. Now, a new development in Ant Financial's bid for MoneyGram. MoneyGram shares surged more than 6%. That's after Jack Ma's financial services company raised its bid for the US-based payments firm by 36% to about $1.2 billion. But Euronet, which has a competing offer, is reviewing Ant Financial's amended offer for the company, saying it continues to believe US regulators will thwart the Chinese firm's bid for the Dallas-based money transfer company. Now, staying with the tech landscape in Asia, one company in Taiwan is making a big leap into investing in the country's startup sector. Taiwan Accelerator is the country's first seed accelerator, sometimes referred to as the Y Combinator of the region after the US's famed seed accelerator here in the Bay Area. Now, TA recently invested in 8 wide-ranging startups from e-commerce to big data and even agricultural technology. And after going through an 8-week program, Taiwan Accelerator is in the US for its first roadshow. Joining us now, Richard Kang, partner of Taiwan Accelerator. Richard is also the founder and CEO of Finterest Ventures, and you're actually based in Toronto, in Canada, but you're over here with the 8 companies that you've helped so far mentor and coach. And what does the US roadshow potentially bring for them? Cash, I suppose.
Well, but hopefully some cash, but also just a bit of flag waving. So we've heard a lot of technology coming out of Bangalore, Shenzhen, Seoul, Singapore. I don't know if so many people know about the startup community in Singapore. Big names like HTC and Taiwan Semi, big public names, but do they really know what other innovations are coming on beyond hardware, for example? So
Taiwan is being put on the map. What about the areas that you want to see growing in particular? We mentioned there e-commerce, agricultural technology. Are we seeing, from the fact that you have TSMC, the chip maker, Taiwanese semiconductor, are we seeing chip as a particular vertical? What sort of verticals are you seeing being developed by the startup community?
Yeah, I see a similarity to Korea. So Korea is well known for hardware, but a commoditized hardware. This is the component that goes into the iPad or the iPhone. How much money can you make with that in the future when it's so commoditized? Same with Taiwan. So to think of e-commerce, software in general, AI, cybersecurity, this is the future. This is where it's really the creative, what I call the ultra-skilled worker. This is why the H-1B visa issue in the US is so interesting to me, because that ultra-skilled new 1% of the future is not going to be in the coal mining industry. They're going to be in solar tech or something that sounds more like quantum cryptography or something crazy like that. That's the future. And that's where Taiwan, like Korea and China, India, they're all competing in that space. That's what interests me a lot.
And so, on the back of the H-1B visa and reining in of it, slightly more difficult to be able to get the access to the United States, do you think we will see more and more very highly skilled tech entrepreneurs remain in Bangalore, in Singapore, and indeed in Taiwan, rather than trying to come and make their futures in the United States, for example?
Yeah, so I'm Canadian, and I'm now in San Francisco, so I'm trying my best not to make it sound anti-American. It really is not about the demise of the U.S. It really is the rise of others. So when I say something like there will be another Wall Street, not there might be, there will be another Wall Street, there will be another Silicon Valley, it's not because the U.S. is crumbling. Nobel Prizes, Ivy League, space program, everything that the U.S. stands for is excellent, right? It's just that others are starting to copy what is excellent about the U.S. So their universities, their incubators and accelerators, that's what's happening now. So when you think of these companies that are inventing new technologies in agritech, that's what the U.S. should be thinking about. That's what Trump should be thinking about. What can we use for infrastructure buildup that is in the technology space? Things like that. Why can't this brain trust come out of Asia, Africa, anywhere else?
And the brain trust that you're fostering. Tell us how you've perhaps taken a leaf out of Y Combinator's book, but you're an accelerator, a seed accelerator. What do these companies expect and gain from you when they come on your program?
Right, so they have some global expertise from Westerners and those who are local, but they also have a different point of view because they know that they're very close to certain markets like China. So a company, for example, just to tout one of ours, TSSE, Agritech company, which you mentioned, Agritech. So I met the professor talking about pheromone technology. I was pretty good in bio, but I didn't really understand what he was saying, but I did understand the potential for China. So you're building some kind of canister that will attract insects so you don't have to crop dust or throw pesticides on a crop. That means that that's going to yield more in terms of quantity, but also yield more in terms of dollars because that's an organic product now, right? And China has a 5-year plan, and of their 7 things on the list, one is environmental protection, which is not just global warming, but clean stuff overall, clean water, clean air, clean food. And you have also an educated consumer that's saying, I don't like tainted milk, problems on the front page news again. And so this kind of product is what they're demanding. You're kind of hitting a lot of keywords with just this one company. It's
interesting. You've done the accelerator in Taiwan. You're looking to expand across Asia. What about the geopolitics within the area? I mean, we're just looking at, very sadly, what's happening in North Korea, South Korea, that puts under pressure. We're looking at, sometimes relationships between Taiwan and China aren't always the strongest. How do you navigate all of that, or does that not stop entrepreneurship in any way?
Yeah, I'm glad you asked. So in my previous life, I co-founded and managed a family of ETFs focused on emerging and frontier markets. And we made a conscious decision not to include South Korea, Taiwan, and Israel, even though at that time some of them were considered emerging markets. We thought they were developed markets. All 3 countries, Taiwan has Chinese missiles kind of pointing in that direction, Korea has North Korean missiles pointing in that direction, and Israel has missiles from everywhere pointing in that direction. Somehow, they were able to create the cell phone, or modern telecommunications, hardware. Most of the technology that we have in our pocket or inside our house comes from these 3 countries. So we can't say that because someone's pointing weapons at them, that they don't strive hard to make a better living for themselves and their country.
Geopolitics or not, it looks like growth is happening in Asia, and we'll keep a close eye on Richard Kang, who's partner of Taiwan Accelerator, and indeed growing across Asia. Thank you for joining us, Richard. Now, coming up, the inside track on Uber. We dig in to the privately held company's financials. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Treasury Secretary Steven Mnuchin says getting the goal of getting tax legislation passed by August is, quote, highly aggressive, not realistic at this point. In an interview with the Financial Times, Mnuchin says the legislation is being delayed because of the setbacks in passing healthcare reform legislation. U.S. Supreme Court Justice Neil Gorsuch hit the ground running. A week after being sworn in, Gorsuch took the bench for the first time today, filling the space next to Justice Sonia Sotomayor to hear arguments in 3 cases, with another 4 scheduled to follow later in the week. In Asia, questions are being raised about just how much influence China has over North Korea's leader, Kim Jong-un. According to people familiar with the situation, North Korea snubbed senior Chinese diplomats this month as tensions mounted with the U.S. The North Koreans ignored requests for a meeting from China's foreign minister and its top envoy for Korean nuclear affairs. And Russia plans to hold talks on Syria next week with the U.S. and the United Nations. Those would be the very first such negotiations since President Trump took office. Russia and the U.S. have been at odds since the president ordered a missile strike on a Syrian airbase. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. here in New York, already 7:30 a.m. in Sydney. I'm joined by Bloomberg's Paul Allen. He has a look at the markets. Good morning, Paul.
Good morning, Elisa. Well, we're seeing some strength on Nikkei futures early on. Futures traded out of Osaka already up 0.9%. Normally I'd tell you about ASX futures, but they haven't started trading yet as we prepare to come back to trading after the Easter break. Some interesting things happening around iron ore today. MySteel is the latest to pile on with a dire prediction about the future of the price there, seeing it below $50 by the end of the year. The iron ore price was down 9% over the past week, with futures slipping as well. The main event in Australia today is the Reserve Bank of Australia minutes for April. The cash rate was left unchanged this month at 1.5%, but we'll be watching for commentary around house prices and household debt. That's become a focus of the Governor, Philip Lowe. He's mentioned in his latest financial stability review a concern about a lack of buffer for many borrowers. Also watching China home sales. That's due out in a few hours, expected to stay resilient as buyers rush in before new restrictions. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Now, Netflix reported slower growth than forecast in the first quarter, held back by a lack of big releases like Stranger Things that generate fresh subscriber sign-ups at home and abroad. But it did offer up a more optimistic picture for the current quarter. Joining us now for more from Los Angeles is Bloomberg News entertainment reporter Lucas Shaw, and that might be why we're seeing a recovery in the share price, the optimism for the second quarter, Lucas. I'm looking at my Bloomberg. I've dug into a great chart, BTV 83, if the terminal users want to get into it. We do see share volatility on the day of earnings when we see, well, the day after we see them drop. So perhaps no surprise if we see some swings in the share price. But what's the most important headline from your perspective?
Probably that they're going to continue the growth going into the second quarter. If you're an investor, you look and you see the initial performance in the first quarter, you get a little bit nervous. They miss. Every Netflix miss, even when it's slight, tends to get treated like it's a huge deal. That would typically send the stock going down, and that's probably why for the first 45 minutes, first hour it was. And it's recovered probably because people thought about it a little bit more. And realized that the thesis is pretty much unchanged. In quarter two, you're going to see better growth than they've had historically. One other theory that had been tossed out was that some of the people who maybe shorted it going in tried to cover it later in trading. But it's really, as you say, a mixed bag for Netflix this quarter. You often come out of a Netflix earnings report with a very clear message of, oh, this was a really good quarter for the company, really bad quarter. For the past couple of years, it's been mostly good, and this one is more mixed.
More mixed, but still the spending still comes in. We've seen, what, $1 billion to be splashed on marketing, let alone the $6 billion that is being spent on making their own content. Talk to us about some of the scoops that you've had in the new ways that they're providing perhaps feature films rather than just programming. Does this future look bright in terms of the way that they're using their cash?
Yeah, well, Netflix said in this release that they hired this guy, Scott Stuber, to oversee their film division. Netflix has made a handful of original movies over the past couple of years. They actually admitted in the release today that one of them, this sequel to Crouching Tiger, Hidden Dragon, a movie that you may remember from several years ago, did not do particularly well. Netflix doesn't customarily call out any individual program as not doing well, but they did here because their feature film initiative has been a little all over the place. And so they brought in this guy, Scott Stuber, who's made a bunch of movies like Ted, to try and bring some order to that. Netflix will release 3 of its biggest movies ever in this next quarter. They're going to have War Machine starring Brad Pitt, Okja, which has Jake Gyllenhaal and Tilda Swinton, and then another Adam Sandler movie. And much as people like to tease Netflix for its love of Adam Sandler, they say those movies are working because they're making 4 more on top of the first 4 that they ordered. So Netflix has a lot of new movies coming, and as you noted, they're spending a lot of money to support it. There's just so much TV being made now that Netflix realizes it's got to try and spend some money to keep bringing people in, because when it doesn't have a big hit in a quarter, they don't grow as much.
And we look for the House of Cards in the second quarter and how that happens to drive up the numbers in this current trading session. Thank you very much indeed, Bloomberg News reporter Lucas Shaw in LA for us. Now, Uber has lifted the lid on its financials. In an unprecedented move, the privately held company shared the numbers exclusively with Bloomberg. It shows that Uber's gross bookings more than doubled last year to $20 billion. Net revenue was $6.5 billion, while net losses were $2.8 billion. The revelation comes as the company's corporate culture comes under fire, and top executives flee as the startup investigates claims of sexual harassment and a toxic work culture. Joining us now to discuss is Bloomberg Technology's Eric Newcomer, who got those numbers. Also clearly covering Uber as senior executive editor of Bloomberg Technology, Brad Stone, who wrote the book on Uber, of course, with your great piece, The Upstarts. But let's, first of all, Eric, ask the key question. Why'd they drop the numbers?
Well, they come out the last couple of quarters. We'd gotten them the first half of the year. So it seemed, I was sort of like, listen, it's a matter of time. We're going to get them. But they come out and it's sort of the whim of whoever's leaking it to sort of frame them and share what they will. So I think Uber felt like, okay, we can own the message a little bit more. And this is sort of an experiment for them.
An experiment. What did you read into the numbers, Brad? Because I was blown away by, yes, the growth, but still the hefty losses. This is what, $1 billion that they're managing to splash each particular
quarter. Right. Yeah, extraordinary growth on the top line, $6.5 billion over the year, but also the bottom line. And look, for me, we've seen this movie before, right? Amazon in 2000, losses, I think over $1 billion, about 50%.
Like $2 billion adjusted for inflation.
Yeah, I think it was $1.4 billion at the time. 50% of revenues, extraordinary. Now, Uber has some advantages that Amazon did not, right? It's a private company, and we are in this extraordinary capital environment still where it seems like a lot of people are willing to provide these companies money. Uber is also expanding geographically and as a platform, right? Rolling out things like Uber Eats and Uber Rush, Uber Pool, of course. So, I tend to give these companies the benefit of the doubt. Obviously, it's got to grow into that loss a little bit and continue to show the top line growth.
We were just hearing from Netflix that, sometimes you need to splash the cash to be able to keep up with competitors. What interested me is how murky some of the numbers are when you're looking at them. Eric, talk to us through about, because the losses don't actually include stock compensation, certain real estate investments, automobile purchases. I mean, how much bigger could they actually even be?
Yeah, Uber refers them to as EBIT losses. It's $2.8 billion, not including China. They lost at least $1 billion last year in China. So we're looking at $3.8 billion, which is it's historic. It's hard to find a private company who's lost that much money. And you're right, even that, we're not sort of quite capturing the full extent of it. We tried to look through the actual money in, money out. They've raised, I'm going to get the number wrong, $15 billion or so in equity and spent at least $7 or $8 billion of it. So if you look at that, you can see, okay, the losses don't encompass sort of the full extent of the cash burn. And then just to add on to Brad's point, I mean, Uber would say they're experimenting in parallel rather than in serial like some companies. They're doing Eats, autonomous, everything at once because investors are providing them the opportunity. So whereas Amazon's been aggressive with its cash flows, Uber's been able to try and do it all at once, and that's what happened. Of course, after the 2000 .com spending, Amazon laid off like 15% of its workforce, so there are dangers to going as big as Amazon did then.
How much should we read into saying that, of course, Eric, they're saying that investors have given them this cash, they're able to put it to work, and one of their investors is indeed Jeff Bezos. How much do you think he actually says, look, sometimes always promise jam tomorrow because you need the jam today and you should keep on spending?
Well, Bezos invested very early on, so he probably, I don't know that he would back this kind of company now. I guess we'll see, right? I mean, this is a company that has gone out pretty much every year since it started. And, you know, you have the public scandals, of course, over the last couple of months, and these numbers, which maybe aren't for the faint of heart. I think we'll see fairly early on if they do go back and raise capital and what that valuation is. I mean, companies like Ola in India have taken down rounds. So it doesn't seem like the same optimism is quite here around ride-hailing. If Uber can go and raise more money at an even higher valuation, or maybe we see a public offering in the next 12 months or so, you know, then we'll see how investors are reacting.
And this is something that perhaps has been pushed into the slightly longer grasp because of all these scandals that have encapsulated Uber. And maybe this is in some way trying to distract us from that. Eric, is that your viewpoint? And also yet another push for Uber to allow tipping in New York and California. Do you think that will be allowed? Why won't they allow it?
I don't think it's a sort of outright distraction attempt. I think they do need to reassure employees, investors, sort of partners that this company isn't imploding, and they definitely think the numbers reflect well. I mean, their view is that the per ride losses are going down, bookings are going up, losses are staying flat, and that's what you should value them on, and that's sort of what they're going to be looking at. On the tipping issue, you know, I've personally in our newsletter said I think they could launch tipping this year. They want to do it in a situation where they would get credit for it, and they want to do it in a way that's palatable to them. You know, they're a tech company. There are lots of different ways they could sort of mess around with in-app tipping. So I think it'll be interesting to see how they react. I noticed in our story, Uber wasn't totally disowning the push here, so it'll be interesting to see whether they let New York be a test case, or maybe they haven't resisted yet, but there's definitely soul searching within the company about how to handle tipping.
And soul searching in the company to handle many, I think.
Yeah, exactly.
Great to have such analysis, of course, with you both. Thank you very much indeed, Brad Stone and Eric Newcomer. And of course, you know, you can always go and read their stories online as well for all sorts of in-depth coverage on this startup. Now, AOL co-founder Steve Case appeared on Bloomberg Surveillance Monday for a wide-ranging conversation about the tech scene. Speaking with Tom Keene, Case was optimistic about future growth. Have a listen.
Silicon Valley is great, but that's where venture capital started. There's an ecosystem there that's well developed. It will continue to be great, but we have to figure out ways to support entrepreneurs everywhere.
And Case also discussed a hot-button issue facing tech, U.S. immigration policy.
We need to make sure we are welcoming to people while still enforcing our laws, and that's particularly important in the technology sector, the innovation sector. That's where a lot of 40% of the Fortune 500 companies were started by immigrants. 50% almost of Silicon Valley companies were started by immigrants. So we need to figure out how to strike this balance.
Now coming up, one man is spending millions to get Elon Musk to dump Trump. What's behind his campaign? Next. Now, a story we're watching. Big data company CLOUDERA aims to raise as much as $210 million in its initial public offering. The company, which is backed by Intel, is marketing 15 million shares at $12 to $14 each. Now, CLOUDERA will list its shares on the New York Stock Exchange under the symbol CLDR. Now, one man is doing everything in his power to break Elon Musk's ties with President Donald Trump. Doug DERWIN, managing director of TRIAGE Ventures, is preparing to spend millions on a campaign he's calling Elon Dump Trump. We caught up with DERWIN and asked, well, what the best possible outcome would be. Take a listen.
Well, I'd like him to step away from the boards. I think the idea that Elon Musk or anyone else can whisper into Donald Trump's ear and get him to suddenly change his position on climate change is naive. It certainly has not happened so far, and the likelihood that it's going to happen in the future, I think, is about zero. In fact, I met with some of Musk's top people who tried to dissuade me from this campaign, and I said, okay, look, if you can tell me something that he has accomplished, something that he has gotten Donald Trump to change his position on, I'll back off. If you're actually making progress, I'll back off. They had nothing.
So Elon Musk's people, and therefore Elon Musk, probably already knows about this campaign and has yet to respond to you in any way?
Well, they responded in that they tried to persuade me not to do it. That was pretty much the response. It also, I got a sense that they felt it was out of bounds for anyone to criticize Elon Musk on climate change.
Would you put your money after the campaign goes live? How else do you want to see a change come about from the administration in their relationship to climate change? Because if you feel that Elon Musk cannot in any way whisper words into Donald Trump's ears, what do you then do for the next 4 years or even longer?
Well, Donald Trump is not an emperor. He's not a dictator. He couldn't even get health care through. And there is a lot of opposition to Donald Trump on climate change. There's opposition coming from state governments, from the courts, from Congress, and from the employees of the various agencies. That opposition will determine how much of Donald Trump's agenda he can get passed. He can get through at the EPA and at Congress. And that's extremely important. That opposition requires public support. It requires the public to come out in opposition to Donald Trump's climate change policies. That will energize the opponents of those policies in all the various institutions. And that requires leadership from those who are important, who are recognized as important on climate change, and that's Elon Musk. If he speaks out, the opposition to Donald Trump will be energized. There will be more pushback than there otherwise would be. Donald Trump will get less of what he wants in cutting back the climate change regulations, and we will have less greenhouse gas in the atmosphere in 4 or 8 years.
That was Managing Director of Triage Ventures and founder of the Elon Dump Trump campaign, Doug DERWIN. Joining us now for more is Bloomberg Technology Editor Alistair Barr. You edited this piece that's on the Bloomberg right now and on .com. $2 million this man is willing to spend. And do you think people are listening?
I think people might listen now. They certainly stopped listening in the last few weeks, I would say. Initially, when Elon joined the advisory council, there was quite a lot of concern and protest about it, and now it's died down. So I think this is Doug's effort to try and get the protests going again.
And when you were looking at the background to Doug DERWIN, I mean, it's a successful career. He was a lawyer. He's now a VC. He had cash that he was going to put into a Tesla, and then decided he was so angered by the relationship, he decided to renege on that particular purchase and spend heavily in media even. What do we expect to come of this campaign? Because we're going to see bits put out in the press, on television, and in newspapers.
Well, I think he kind of came from nowhere. He was an IP lawyer, which is pretty straight-laced, and I think this is really he seems to has become obsessed with it. It's very, very quixotic, and I think we'll hear whether it's having an effect, whether people actually respond. So one particular really interesting idea is to go to college campuses, set up information booths, and try and steer young engineers away from joining Elon Musk companies. Tech companies would hate that type of thing, and if anything happened where that gained momentum, that would probably be very damaging.
So clearly we'll see how much it affects the brand of Tesla, of these companies, and indeed of Elon Musk himself, and await his response. Great editing, great piece. I urge our viewers to go and read it online. Thank you very much, Bloomberg Technology's Alistair Barr and Ashley Vance, who authored the piece, of course. Now, developers across the globe are gearing up for Facebook's annual F8 conference. We'll hear from the company's head of partnerships about what to expect. This is Bloomberg. Now, Walmart has its eyes set on another e-commerce startup. The retail giant is said to be in advanced discussions with the online men's retailer Bobonos. Now, according to a person familiar with the matter, Walmart's e-commerce chief, Mark Law, has been working aggressively to close the gap with rival Amazon since he joined the company in 2016, when his prior company, Jet.com, was acquired. Now, Facebook is gearing up for its annual developer conference. CEO Mark Zuckerberg is expected to take to the stage Tuesday and expand on his vision for the company beyond the social network. We spoke with Facebook Vice President of Partnerships, that's Ime Archibong, about the role of developers.
If you rewind back a decade ago to 2007, F8, which is our big developer conference where we try to bring the community together, we were in San Francisco, probably 800 or so people. And we were focused on what we were calling the social graph, right? It was the first instantiation of the Facebook platform. Fast forward 10 years to what we're going to do in San Jose, and I couldn't be more excited because the community itself has grown to what will be probably 4,000 people in the room alone. Millions of people probably watching on live stream, given the birth of technology and kind of what that allows you to do.
The importance of F8, this is an annual occurrence. What do you hope to achieve when you're getting the developers in the room? Is it trying to convince them, look, we are the best platform, the best company to be integrating and providing content for? Because let's face it, these developers are being pulled every which way.
Sure, yeah. No, for me, it's probably twofold. I think the first, you have to go back to kind of understanding what a hackathon is and like the importance of that to the culture of Facebook. So when we had our first F8 in 2007, it was, let's talk about this platform that we just spent a couple months building for this developer ecosystem and community. We had no idea how people would react to it, honestly. But we put it out there for the world to see, and we honestly said, okay, over the next 8 hours after we've announced this platform, let's just hack on it. What can you build? What applications can be built? Let's think about people. How can we actually build better, more immersive experiences based off the fact that we now have a collective energy of 800 people in this room to build on this platform? So when we fast forward 10 years later, a decade later, that still is the same premise, which is, sure, maybe it's just not the Facebook platform. Maybe there's Instagram and WhatsApp and Oculus and internet.org, all these different platforms and tools and programs that we've built to actually help the community. Let's introduce you to them. Now let's go see what we can do and we can build for a collective stakeholder, which is people. And ultimately, we're trying to touch people.
You said tools to help the community. How are the community in all the far-flung places? I was exhausted looking at just your Facebook and where you've been. I mean, Pakistan, Ghana, Mexico, and this is just in the last couple of months, not even the last month even that. How much are these communities showing you what you need to do and what areas you need to be tapping into?
That's the most important piece of it. I mean, that's, I think, the beauty of the platform. When we started with the platform, we said there are too many things out there in the world that we want to build that we won't have the resources to build. Let's figure out how we can make sure that people can build for it. The inverse of that is that there's too many things out there in the world that we don't even know need to be built, but the community knows how to build it. So let's make sure that we're extending the tools and the platform and the programs for them to build for it.
That was Ime Archibong, Facebook's VP of Partnerships. And don't miss our interviews from F8. Tuesday, we'll be sitting down with David Marcus, head of messaging platforms at Facebook. And on top of that, we'll be speaking with Apple co-founder Steve Wozniak in Tuesday's program. That does it for this edition of Bloomberg Technology. And remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg.